Akash, welcome to Talk 100.3 once again.
I only guide you towards the right real estate, not force you to buy real estate just because the market's up.
There you go. See, again, guiding you to buy the right real estate. But you know what, Akash, real estate as an instrument of investment.
Yes.
You know, there are some people who think of it from that perspective. Most of them think that, okay, I'll go and live there and, instead of paying rent, I would rather buy my own property.
Correct.
Right. As an investment instrument, how is property looked around here in the UAE?
And they had come up with limited areas of freehold, which
Okay.
they said that you can buy properties in certain areas. And so that changed the perspective. However, before that, people have been living in this country for almost 20, 30 years, including me.
Right.
And they have been only renting properties. So becoming a landlord was kind of a big dream.
Mm-hmm.
So some people, they took this as an advantage. They started buying first they bought their houses themselves.
Okay.
But also they understood the value of real estate investing because the supply was so limited in the freehold section. They went ahead and putting a lot of money in there. So anywhere in the world, the real estate is one of the investment, and Dubai became a main investment because again, it's a new sector which was opening, a lot of people which were coming, and you look at it, the percentage wise, there was 0% of expats owning a property versus 100% renting at that time.
That's right.
That ratio is changing day by day. But however, at that time, so it was no brainer that you have to pick it up. And what happened when this was introduced? So a lot of people came in for a quick buck.
Okay.
So the property prices which were launched at 300, 400 dirham per square feet, people will still not believe me when I tell them that JBR was launched and sold 700 dirham per square feet or less than that.
Wow.
So
700.
and today it is, and we are talking about prime JBR overlooking the sea with a nice beach view. The one which was on the backside with a partial view was around 400 dirham per square feet.
No way. And in what year are we talking about?
We are talking about 2002, 2003, and people were queuing up, like billionaires were queuing up, and initially there was no control, so people were picking up 20 units, 30 units. Then they saw the kind of crazy demand, and then they said, okay, 1 unit per person and no choice and things like that. So whenever you see the market, has grown. So real estate is a very good investment. This country it's the easiest investment that you can do.
Okay.
Basically, there is no capital gain tax,
Right.
which is there. A lot of other countries, the capital gain tax plays a very important role when you're investing. So a lot of people put their property, the payment, the investment into a property, thinking that they can buy only one house because that's only tax free.
That's
If
right.
they keep on buying and selling houses, that's the taxes. So they choose other products to invest. Dubai is 100%. So you can buy as many number of properties as you can. There is no capital gain tax. And as we go further, we will be countering today's episode saying how does real estate in Dubai values against stock investing,
Right.
against gold investing, against investing in your own countries. So I think this is the main topic that we want to take it. Real estate versus other assets to invest in.
This is interesting. Yes, it's going to be a fantastic conversation where we try and understand the market here, try and understand why real estate is a fabulous instrument of investment when you are trying to put your money in, and especially in this part of the world, be it stocks, be it gold, be it bonds, or investing in your own home country. What way you want to go? We will be diving deep in this episode of Talk Real Estate. I'm Neil Oja. Joining me today is Akash Kanjwani. We'll take a quick short break, and when we come back, we will, as I said, go and dive deep into your options when you have that money that you want to invest. Where should you put your buck? And today we are talking about why real estate is in some way better as an investment instrument as compared to maybe stocks, gold, or investing in your own home country. Akash, welcome back to Talk Real Estate on Talk 100.3. Now, the question comes in when I have money. They say that make your money work, right? You shouldn't be working as hard as you are. Your money should also be working. To make your money work, people invest, and they invest in stocks, they invest in bonds, gold, probably send money back home and put it on in fixed deposits whatsoever. Now, what is the difference between investing in real estate versus investing in stocks?
So when we compare to stocks, stocks you need to analyze. Stocks is basically you're betting or taking a stake in a company. You are looking at the performance of the company, which can change. You can look at ratings of the company, which have been done by auditing firms and various rating agencies. You can look at the balance sheet of the company, and you can invest based on the history of the company. And the stock fluctuate a lot, so you need to make sure that you are an expert in the market and you study a lot about the stocks. However, real estate doesn't need that kind of expertise. Real estate is that's the reason it's called real. It's asset in front of you.
Nice.
Stocks is something that you need to understand, believe what people are telling it to you. We had very recently a case of SPB Bank, which is failure. This particular company stock was rated as AAA. I mean, it was A rated and BBB rated, which is the highest rating you can get for a company. This bank was rated as the top 5 banks in the US for the last 5 years by Forbes magazine, and still it failed. That means these numbers sometimes don't speak the truth. These are sometimes they are manipulated, they are paid around, and then you end up buying a wrong stock. You might buy, but I'm not against stock. Let me just tell it. It's not like you shouldn't leave your stock market. You should always invest a bit. But real estate, as compared to stock, is a bit more stable. Okay. We had only one recession which was caused because of real estate in last 100 years, which was the 2008 crisis, which was primarily because of real estate, because people were putting in a lot of money in real estate. They were leveraging a lot. They were taking mortgage rates were around 110% of your property value. Because so today the property value was at 1 million. Tomorrow they were estimating that it should be within 1 month around 1.1 million. So the banks were giving you more money than the property was worth it.
Okay.
This is where it created a kind of bubble. However, after 2008, the market has changed.
Right.
The banks are only are giving you a loan of 80-85%. The valuation is pretty strict. The valuation before this was like 10 transactions which were done in the last 1 month. They were looking at an average of that and they were giving you a loan. And very easy to manipulate the valuations at that time. Today, it's a very regulated community. It is the land department is very strict on valuations. So you cannot manipulate your valuations. So that means you have to put a cash component which is there. Stock market is not, still there are a lot of ways to play around. Yes, it is regulated, but there is a bit more riskier asset. However, real estate is not as liquid as stock market. So today, if you make a loss, you can still get out of a stock and you can do that. Real estate takes a month's time to finish the transaction. However, Dubai, we have the land department has recently announced quick transfers, quick transactions, which means that if you're submitting your report for valuation, you don't have to wait for hours. You just have 10 minutes. The system generates the market report instantly, and your transaction reports are there. So Dubai is trying to finish the transaction as faster as possible, and selling and buying property in Dubai has become a very easy task. So if you have every document ready, we have done a transfer. We found a buyer in the morning for a property in Emaar. We applied for NOC. The NOC came in 1 hour's time. And we did the transfer in 4 hours' time. And this is how the quickest transactions can work in Dubai.
This is fabulous. I mean, you're right when you said that, real estate may not be as liquid as stock is. Like right now, I see that, my stock has done well and I want to exit with a profit. Then I would just quickly book my profit, say sell, and I'm out. I get my cash. Right? That is the advantage of being in the stock market. Risks obviously are there. Real estate, I always had this perception that if I want to sell my property, it will, A, to find a buyer. B, once the buyer is there, then the governmental transactions, to get the right papers, the documents, the buyer should have the loan and everything approved, the mortgage approved. It will take, a certain amount of time. And, in that period of time, maybe I might just miss the boat.
Well, the thing is, this is where you need to understand. You have to buy real estate, which is in high demand. So a real estate with high demand means that you are, the transactions are faster. Obviously, you are buying not in an off-plan property, because off-plan property takes a certain kind of investors to buy. But if you're buying in properties like JLT, Marina, Greens, these are all-time demanded properties. And if you're asking a price as per the market, the transaction doesn't take more than 15 days to close.
Wow.
Even if it is a finance buyer, today the banks are so much ready with the paperwork. They know your history. The credit ratings are online available. The paperwork, the approval, the valuation, the whole process doesn't take more than 15 days. Maximum, if you want, you can extend it by 30. But the thing is, a buyer should be ready with the price, and you should be as per the market price.
Okay.
So I think the transaction is not instant, as you said, but it's not very long period as well. And again, as I always keep coming back to understanding. So like stocks have good stock, bad stocks, and you need an expert advice on that.
Right.
Similarly, properties have good properties, bad properties, locations, good location, bad location, new development, old development. So all those things, if you are able to understand on your own, fantastic. If not, we are there to guide you.
Well, there you go. The experts are there. Skyview Real Estate, that's the place that you got to be with Akash Kanjwani and his team, always ready to help you. We've discussed about stocks and why real estate and where does real estate stand in front of stocks vis-a-vis when you're looking to invest your hard-earned money. What we'll do is we'll take a quick short break, Akash, and come back, and then we will look at another instrument of investment, and that is something that people have loved doing, especially the Indian community, the subcontinent community, and that is gold. We all love gold, we all love to invest in gold, and it's been there for generations in the families. Now, today's conversation is about real estate as an instrument of investment as compared to other investment instruments like, say, stocks, gold, or probably investing in your own country. A while back, we were talking about how stock market and real estate market, come toe to toe. But there was a thought that came to your mind, Akash, and that was that when you invest in some really good stocks, okay, you get dividends. Like if you invest in, say, in hypothetically ADNOC. Okay, ADNOC Gas, the IPO just came in. If you get an allocation, you know that you will get dividends.
Correct.
How does real estate stand in front of
Well, see, the thing is, dividends are one of the factors of stock, and actually it's the bonus, but not many people invest in a stock of dividends, and because the dividends only offer you 3 to 4% or 7% on the return on this, and it's not fixed. It's purely on the profit each year, and it fluctuates a lot.
It does.
However, real estate, in fact, in dividend, I'm glad that we are discussing this, because in real estate, the biggest factor is the rental returns. And rental returns in Dubai is the highest in the world. And I'm not only talking about long-term returns, which are annual rentals, because anywhere in the world, you get paid monthly.
Right.
You get checks, payment monthly. Here, you have to get payment at least one check or 4 checks,
right?
Not more than that, and then that's your income which is coming. So imagine you have your EMIs you're paying out for your stock, for your home loan,
right?
And then you get paid entire year in advance. So you have that extra cash which you can use it quickly for anything else.
That makes sense.
Yeah, and that's one part. Second thing is, if you are one very good trend which is catching up is the short-term rentals, holiday homes.
Right.
Holiday homes, you furnish apartments, put it on Airbnb, put it on holiday homes. So you're converting your apartment into a kind of an investment, a hotel, which is there.
True.
And without having that overhead expenses. So you can start with 1, 2, and then I know people which started with 1 or 2 today are managing 50 or 100 apartments with on this.
Wow.
Because the rental returns in holiday homes can go up to 15% on premium areas, and if you are smart enough, you can nicely furnish them, give them the quality service.
Makes
and
sense.
These ones have lot of repeat customers which are coming.
True that.
So Dubai is, as we all know, it's a tourism hub. Every second person that you meet here is a tourist, and then these people, sometimes families come in, so they might need a more casual place than a hotel.
True.
They are not looking for just early morning breakfast. They are looking for something more cozier, more freedom for them to choose. So holiday home is one of the. So compared to stocks where you're only bound by dividends, here you have a lot of rental returns are quite high, and they are good rental returns. So I think if you compare dividend to rental returns, obviously real estate wins hands up.
Interesting. So now, we've definitely found our way and our path as far as, real estate's standing against stocks is concerned. Now, many a times, and I'm talking about traditional investors, have invested across generations in this product, the yellow metal.
Correct.
Gold.
Correct.
right? Be it our families, our moms, grandmoms, they've always यानी कि थोड़े से भी पैसे बच गए, वो पैसों से gold खरीद लिया.
Correct.
And that gold has been passed on through generations, saying कि this is your safety net.
Correct.
कि just in case, God forbid, some bad times come, immediately you can sell the gold, you get cash in hand, and the value of gold has always increased.
Correct.
Where does gold stand in front of you?
Well, see, the thing is, gold is very safe investment that has been traditionally done. And after 2008, before 2008, gold and real estate were considered the safest investment. Then we saw a big change in mindset, and gold became even more safer as an investment.
Right.
But the thing is, see, there are still a lot of drawbacks. Gold doesn't give you any kind of return. It's just a physical metal.
It is.
It's staying there. It doesn't give you dividends. It doesn't give you any rental returns. It is a dead piece of metal which is there. Even if it gives you 10% annual appreciation, but there is no, apart from that, there is nothing. And you can only realize this appreciation when you sell the metal.
True.
And most of the Indians, as you said, from generations, I don't think so we ever believe in selling the metal.
No, we never do.
Never do. Maximum people have become careful, it's that they get a loan on the gold, which is the gold loan. And that is also not very comfortable for a lot of people. So gold is just a kind of a safety net. You can keep it as this thing, but I think this is one segment where people don't like to try. Now, there is another thing which people want to invest in a gold, which is not a physical gold, but they are buying and selling of a gold metal.
Gold bonds, basically.
Gold bonds or exchange which help you to invest
Gold
in gold.
bullion primarily.
Gold bullion. So this kind of investment, it does come up. It also fluctuates like a market. But again, even if you hold a longer stock for this bullion, you're not able to get any revenue out of it.
Right.
Right? It's just the appreciation. So why not? As compared to stock, you get appreciation from properties, you get rental return from properties, stocks, you get stock, and you get dividends. So again, as I said, investment in real estate compares to these two things, I feel more comfortable, but you should diversify. You should not stick to only real estate. So I'm not saying sell all your gold and put your money into real estate today. Don't do that, please. It's just that I'm saying a big chunk of your investment can be real estate because it is the best performing asset that you have today. Another thing that a lot of people miss about, a lot of people confuse with, so gold can be silver, could be oil trading, could be all those things. Again, you need expert advice.
Yeah.
You need to understand gold market fluctuates a lot. So traditionally gold market is up almost, if you're talking about last 20-30 years, it is around 400% up from what it was. But in last 1 year, if you see, the gold market is down 5%.
True.
So right now you're already negative, okay? And another thing, you cannot get loan for a gold investment. You have to use your own cash.
Money. That's right.
In properties, you can easily get a bank
Very
loan
interesting
because you keep it. So a lot of people understand this part and they very carefully put 50% of their own money, put 50% from the bank loan. They invest in a property. When the property appreciates, they clear off the bank loan to the property as it is with them. The rental return helps them to pay the EMI and still save some kind of money. So it's a nice investment which is safer. And what I look at Dubai real estate investment in particularly, is that the demand in Dubai is increasing on a day-to-day basis.
Right.
So the population of Dubai in 2008 was approximately less than 1 million. Today we are talking about 3.4 million.
Right.
And it is projected by 2026 to touch anywhere between 4.5 million.
Wow.
So we're talking about 1 million more people coming in Dubai. These people will need places.
I'm sure.
Yeah. Apart from the increase in the tourist increase has been predicted quite nicely.
Right.
And they will need a holiday homes to stay. The hotels can only be increased. You can only build a 5-star hotel, X number of 5-star hotels.
True.
So holiday homes is something that it is something looking at a long-term picture. And given the feedback that, there are Russians who are coming, Indians, by the way, have become again the top #1 buyers in Dubai in this quarter. This is a big news. Given the feedback that Russians are flooding the market, Indians are still interested.
It's interesting, isn't it?
Yes. And why shouldn't we? Because we are just 2.5-3 hours far from our home.
That's the biggest advantage. That's
Correct.
a very big advantage, isn't it?
Correct.
You're just around, a short flight back home if the need be, if you have to go back home for any emergency. But you get the lifestyle, you get all the benefits of investment, everything in a market which is growing leaps and bounds.
Correct. And well-connected market.
True.
So if you want to go Europe, the first preferred destination is through Dubai.
I agree.
If you want to go to America, Dubai is the first preferred destination. I know people from India who go, sometimes they have to go to Asia, but they take a flight of Emirates, come to Dubai and via here because they're more comfortable rather than going in the, the airlines which are not so good enough.
That makes sense.
So I have seen people who are connected, very well connected to Dubai. So Dubai looks like a very interesting prospect for you to do it. So if you have decided to take an investment, I think your good portfolio amount can come into properties. What kind of properties you want to invest, it all purely depends on what is the budget or what is the amount that you're leaving. So if you have a budget below 1 million, you can diversify into studio, into one bedroom, which is gives you a good rental return. If you have a budget of around 20 to 30 million, then I can suggest you few townhouses and villas which are increasing, and they're projected to increase much more further down. We just had a client yesterday who wanted to put around 140 million in Dubai.
Wow.
And purely on investment. So we sat down with him. He is an exclusive. He doesn't want to buy just any property. He wants something very niche, very exclusive. And we suggested him few mansions, which are very premium. So there are very limited number of mansions.
Right.
If you want to search for a mansion of around 7 and 8 bedroom, there are only 58 mansions that you can buy. Only 58.
Wow.
And there are more people becoming buyers on that. So every segment offers you a good return.
Nice.
And this is where we want to discuss about with the client when they are in our office, that what is the budget, and then take the step ahead on the investment.
This is fabulous. We are having this conversation on real estate as an instrument of investment vis-a-vis some other traditional methods of investment. We'll come back after a short break and talk about investing in your own home country and trying to get benefits out of that versus investing here in Dubai in real estate after a short break. Akash, we were talking about real estate as an investment instrument versus all the traditional instruments of investment, be it stocks, be it gold, bonds. But there's one thought that comes to everyone's mind, and that is you earn in Dubai and send money back home, buy a property back home, build a house back home, and everyone has done that, or rather, everyone comes here with that mindset, maybe that objective that, मैं यहाँ पर कमाऊंगा, पैसे घर भेजूंगा और घर एक जो है बड़ा सा इंडिया में बनाऊंगा या पाकिस्तान में बनाऊंगा.
Right.
How does that mindset, has that mindset changed in the recent times with the real estate booming in UAE?
Well, the mindset has changed. It took a bit of a time for me to make it understand for people, including my own family members.
Okay.
So the thing is, the idea was very simple. When I went into real estate in 2005, 2006, so my father was very visionary. He started looking at my uncles. They all were looking at properties in a different perspective. They always thought that it is a good investment to buy it in Dubai. They were investing in India as well. But a lot of people forget that investing in any of your countries has 4 or 5 major hassles.
Okay.
First thing is buying a right property, because there is so much hassle whether the developer will deliver, the quality, the time period. So many times the project are approved and then the builder has been building it for next 10 years, 20 years, 30 years. In Dubai, that kind of scenario happened in 2008. The government came into the picture and all the projects which were delayed were overtaken by the government. And now you will hardly see any project which has been delayed over the year, because the rules and regulations are pretty clear. Every project progress has been monitored on land department's own app. So the trust factor is much more.
Right.
And government is stepping in. If they see any kind of delay, it's not like they come into the completion date and they say, oh sorry, wait, you have delayed by 1 year. No, every stage they are looking at. So if you're collecting money, it has to go to the escrow account. Escrow account, the money gets released to a developer only when he shows the progress of this. So the government is monitored 100%. Unlike in India, RERA here is 100% money should go in escrow account.
Okay.
In India, there is flexibilities of 60-70% plus land can be paid by on the payment plan or can be a JV. Here, no, land has to be 100% paid. So developer has to be invested so much amount of money into a project that he has to finish it to get his profit out.
That makes sense, right?
So that gives you a bit more confidence. Second thing is the taxes. Now, the taxes when you sell the property in India and bring that money again to Dubai is exponent. And the process that you have to go through, you have to file your returns, you have to make sure your property appreciation is as per the bracket of capital gain tax. Otherwise, you will be ending up paying capital gain tax. Then there is fees that you pay to a broker as a commission, which is also valid here, but then it's very regulated. So you are very clear who is charging what. Second thing is the transfer fees are much more. So Transfer fees in India is around 6.5%. I'm not aware of Pakistan, but in UK it is around again 5.5-6% because there is stamp duty fees which is there. All those factors, if you count in, so your net return on investment is much lower than you expected.
Okay.
And because you might say, oh, the property prices have increased in India or Pakistan or other countries like in Egypt. But if you look at the revenue that you have lost because of the depreciation of your currency, not many people come into the factor. So, even if you, so let's say you bought a property in India for 1 CR, okay, after 10 years, you're selling it for 2 CRs. But the rupee is depreciated almost the same equal value. So, in terms of dollars and dirhams, you're actually at the same place where you were.
That's a fabulous point that you make, because I remember coming here to UAE in 2011, and at that time a dirham was 11 odd rupees.
Correct.
Right, 11.2 rupees. And that's what I remember very clearly. Now it's 22.
Correct.
Right, so it's actually doubled. So what a value I would have got for the rupee back then, it's technically half right now.
And rupee is one of the best performing currencies in Asia today. So there are other currencies which have gone on more lower than that. True. So there is Egypt, there is Pakistan, there is Lebanon, which have lost value on their currency in a major level. So just imagine, so these countries, you will see the appreciation on properties much more higher than what India has seen. But in terms of dollars, they have actually depreciated.
Which is true. So, if you look at that, so the UAE dirham being pegged to the US dollar, that also gives us an advantage when you're buying properties and then selling it, because the value that you get is not getting depreciated.
Correct. So today, if you're the peg, the currency, the stability of the country is what it matters. And because not only we are pegged because it's a strong economy. And the reason it is pegged, for people to understand that it will give you long-term stability of this thing. And they are not gonna, the peg is there for investors, no one else. So why not take advantage of it? Today, if you're buying a studio here for 400,000 and you sell it after 3 years for 600,000, but in terms of rupees, that 200,000 profit you're making will be a huge amount. You will be taking it back to your country. It will be almost 50 to 60% more than what you had bought it 1 or 2 years back, because of purely depreciation rules. And I think this is the reason that I always say that if you're, and again, the rental returns, at least in countries like London, Singapore, Dubai, they are not more than 2 to 3%. And in India, you still pay, because rental is like your personal income. So you still pay taxes on the returns. Whereas in Dubai, the rental returns are not there. So 6 to 7% rental returns on your property here, tax-free. 2 to 3% property returns in your home country, taxed on top of that. And the money is to be collected monthly basis. Here you get one check. The tenant is very happy to give you one check or maximum 4 checks.
That's right.
If a tenant is defaulting on the payment, the land department and the RERA steps in. You give him 1 month's notice. Within 1 month, if he doesn't pay, you have a very clear law that the RERA will be coming into the picture and enforcing eviction notice to the tenant. I remember evicting a tenant from India. Good luck to you.
That's not happening. That's also not happening.
So you're more comfortable. You're more secure here, which is there. Only thing is, you need to be a little bit careful in what properties you're investing, and you need to be understanding the market and your comfort zone. So what is your main comfort zone? I will rather choose properties which are very close to my house, or properties which has more of demand from multiple communities. So I'm not dependent on one community. I rather go with multicultural city place like Palm has become very much favorite of Europeans and Russian as of now. So I might avoid it, because tomorrow maybe they decide to, not so many people will be coming back.
That's right.
So I will go to JLT, which is multicultural. So everybody, European, Russians, Indians, everybody like that community. JVC is, again, I keep on saying this because it is a very affordable community till now. A lot of people's favorite location has become JVC because they are shifting their houses. The community is becoming nice. Schools are there on walking distance. And JVC has parks and everything. So this is also one good investment point that you can start with. But you need to take a decision very soon. Projects are getting launched and they're getting sold out within no time.
Literally in hours. And this is incredible. You know what? You spoke about JLD, you spoke about Palm, you spoke about JVC. That also reminds us that we need to talk about the community of the week. We'll take a quick short break and come back and talk about the community of the week. The conversations have been trying to compare various instruments of investment, be it stocks, gold, bonds, gold for that matter, in also including investment in your own countries back home versus investing in real estate. And I think across all patterns, what you understood, Akash, that investing here in the UAE in real estate is probably just the best thing to do. And if one has to invest here, we always come up with the community of the week. Every week we come here and talk about one community that is in our focus. Which community it is going to be this week?
Well, the community that I think this week we are choosing is something which is very close to a lot of old Dubai.
Okay.
This is actually the closest freehold that you can buy towards old Dubai, and we are talking about Wasl 1.
Okay.
So Wasl Park Gate was the 4 buildings which are ready right next to Zawil Park, and today there is a new launch which is happening of Wasl. This is not many people know. So you can buy an apartment over there, starting 1 bedroom starting from 1.3 million, and 2 bedrooms starting from 1.8, and 3 bedroom for 2.5. If you are looking for something closer to your house, not very far from what Dubai offers you, it has a very nice community with high-end, ultra-modern apartments, glass finishing buildings right next to Zawil Park. It is also overlooking, some of the apartments are overlooking the Dubai frame. You're very easy commuting to every place of Dubai, and it's bang on Trade Center roundabout. So I think this is one of the communities which is looking very promising in the future. And if you are looking to buy in this particular community, you should get in touch with us, which is 050-2859-321. This is the number to reach. The launch is happening today. They are launching a couple of towers. The first tower which is launching today, it's going live now. In fact, I was during the radio show. My phone is continuously, I'm getting messages from my agents that they are standing there and they're trying to secure the best unit for their clients.
Right.
So if any of your clients, or if you guys are interested, just reach it out to us. We will send you the details of the project. We'll tell you the pros and cons. It's an off-plan project which is getting completing in 2026 end.
Okay.
But it's a good location. So this is where I say a long-term investment is based on the good location.
Interesting.
And if you choose a good location at a good price, I think there is no doubt that you can go wrong about it. You can just have to hold it for a limited period of time. Let's say you should always look at around, if it is off plan, the average holding period should be around 3 to 5 years time.
Okay.
And as we were talking about, a lot of people, they invest in stock, gold, or their home countries for a quick turnover. Now, if you are looking for someone to make a quick money out of it, you can also choose about investing in off-plan properties.
Okay.
Where you don't have to pay 100% payment of the property. A lot of times what has happened, and especially in last 3 years, a lot of people have purchased properties with just 10%, 20% down payment.
Okay.
And they have sold it at a premium. Now, personally, I have also picked up few properties which I have paid only 20% down payment, and I've sold it with 20% premium. So it is technically 100% return on investment.
Right.
So this is the kind of investment which is something which can go good, and it is a high risk investment. So you need to make sure that you're backed by liquid cash or liquid assets. So you don't have to invest entire your stock or your gold or something to buy, but you can keep them as a backup. That if I buy a property today, so let's say this 1.3 million town, this is just 10% down payment.
Right.
And if this project gets sold out in next 6 months, the property appreciation will be approximately 10 to 15%.
Okay.
And you will end up paying around 20% in next 6 months. So you're practically looking to 50 to 60% to maybe 100% return on investment.
Wow.
But it could be a situation that you have to pay more. Instead of 20, 30, 40, 50. You need to back that with your liquid assets.
Makes sense. Makes sense. So this is a very interesting proposition here that you made, that, off-plan properties, if you have that kind of liquidity, go ahead and look at, is the term flipping.
Exactly. And this is very common in US. It is very common in Hong Kong. And this is where I started making money. So when we announced on the first radio show, how did you buy property when you were 19 or 20 years old? Maybe your father bought it for you. No. He didn't buy it for me. It was my own money that I invested in. I was investing in an off-plan property. Those days, the 5% down payment was required to invest. And I put in 5% down payment and I sold it after paying 20%. And then the return on investment was almost 60%. So I made profit. And then since then, I have been rotating my investments regularly. So I'm buying properties, selling it during the investment. I don't pay 100% on all my properties. Some properties I sell it at a profit.
Right.
I do suffer some of the losses, but the profit that I make out of them are much more bigger than this. And I am very clear. I'm not too greedy. So if I make a certain amount of payment, even if the property looks it's going to appreciate, but I am done with them profit, I go ahead, I exit it easily, and I go to the next property when I find interesting.
Nice. So if someone wants to do something like this, where they want to get into the market at an off-plan activity and then exit it also, would Skyview Real Estate guide them in doing so too?
So yes, so we have separate teams which is there in the office. First of all, it is the team which is investment team which are very much experts in investment advisory. These are the people who will guide you what kind of projects are launching and what kind of appreciation you're looking.
Right.
So they will sell you the properties off plan with a developer, and trust me, good properties are very difficult to get.
I agree.
So once you get a good property, they will guide you how long do you wait, and after that the secondary team takes over.
Right.
So mostly it's us who will approach you to sell the property on a regular level, rather than you calling us that I want to sell the property.
Wow.
But see, again, every property has a pros and cons, and if you ask me, today is the market price for that property is around, let's say, 3.5 million, but you're looking for 4 million to sell. I will not be able to sell it for 4 million because you're being extra. So I will give you a very simple answer that today is the market price is 3.6. You're making 400,000 or 500,000 profit. Would you like to wait longer? If you wait longer, yes, you might get the goal, or you take this thing. So that approach, we will guide you, but we will not be a investment deciding factor for you. However, there are some international investors which have left this kind of decision on us, but we always try to include them in that kind of, it's always, it's the investors that we get are looking at our track record of last 18 years, that what we have done and how I am performing. And trust me, I don't offer people to buy a property where I will not invest myself. So if I'm convinced, I tell them go ahead and invest. If I'm not convinced, I tell on the face, sorry sir, I don't think so this is. And I think, some people tell me, you say more properties no than yes. I said, yeah, I mean, that's what I'm known for.
It should be.
Yeah.
This is fabulous. See, this is the right advice that you get when you go to Skyview Real Estate. Akash, thank you so much for your time joining us every Wednesday between 10 to 11. And if you have a query, Skyview Real Estate. Akash, what is the number if you can tell us one?
Yes, so you can reach us on 050-2859-321. You can also send us WhatsApp on the same number, which is, again, I'll repeat it, is 050-2859-321.
050-2859-321. Let's go. Call them, reach out to Skyview Real Estate, and all your queries will be answered as far as real estate is concerned.